Hi, everyone. Thank you so much for joining today. My name is Emma Brogan. I'm the brand marketing coordinator here at Planoly. Just a little background about Planoly. We are the first visual social planner made for creators by creators like you guys. And we help creators with everything from planning and posting content to growing their audience, and building their storefront. And Planoly supports all major platforms like TikTok, Instagram, X, Facebook, YouTube, Pinterest, Threads, LinkedIn, Amazon, you name it, which is phenomenal. Another thing great about Planoly is since we're always working for creators, since the majority of our team is creators, is like having the best tools on how to make your lives easier. So we recently just launched some new AI features, which is very exciting. And we also just integrated with Snipfeed Creator Store, which is a link in bio tool that helps creators monetize all their digital products. Have schedule one-on-ones, send invoices, create your customizable template, all these great little tools to help you, really just become the best creator yourself. I definitely one of Planoly's visions is to empower creators to make a living by sharing their passion with the world, and which is true. Our team is constantly trying to help creators be the best version of themselves. And if they have any questions or concerns, our team is always here to help you guys and give you guys a giving hand. So with that being said, we thought it'd be great to partner with Cookie Finance. Nate will give his whole spiel about why he started his amazing business. But we just thought it was a great collab, just having two authentic brands come together, really to focus on creators and help them, especially during tax season. So you know, like what you can write off and how to save your money and make your money, because that's what we're all here for. So I will give all to Nate.
All right. Well, thank you, Emma, for having me on. I'm really excited to be working with Planoly and Snipfeed to help you guys understand taxes a little bit better. So, how we're going to go about this is in three different parts. The first part, I just want to make sure we are all on the same page of the basics that everyone needs to be on to get their finances in order, to make sure that you're taking advantage of all the tax deductions, everything else. So we'll talk about that, how to get set up with your taxes, your business, everything else. Next, the second part is we'll talk about the actual taxes you will be paying as a creator to make sure you're not blindsided when you get that final tax bill at the end of the year and you see the amount, you're not blindsided by that amount. And then the final piece is the good part where we are actually going to go through and figure out how can we minimize our taxes as much as possible, finding every single deduction available to you. So that'll be the final piece. And let's go ahead and get started. Uh, just a little bit about our company. We are an accounting platform for content creators. We only work with creators like you. We don't work with anyone else. And so we know this industry backwards and forwards. We've seen it all. We work with creators across every platform, all across the country. And what we do at our company is we help people get their businesses set up, get their finances in order, take care of their monthly bookkeeping, quarterly taxes, end of the year taxes, all of that good stuff. Uh, we've already kind of no need to talk about me. I just want to get straight to the good stuff. So this is the first part about getting your business set up, and we call this phase zero. This is the foundation that you need to set to make sure you're set up for success as a creator. And it really all starts with these three main things. If you can get these three things put together, you are going to be ahead of 85% of the people that we talk to. We talk with creators who are making $1 million a year that don't have these three things set up. So if you can do this from the very beginning, you are well on your way as a creator. And what we tell people is if you're serious about making content, making money from content, even if you're only making $500 a month, $1,000 a month, it still makes sense to do all of these things because the earlier you start, the better. Trust me. So, the big three things we wanted you to take care of this week right away is get that LLC set up with an EIN, get a separate banking account for your business where you can separate all your business and personal expenses and income, and finally track your financials. So let's go in depth a little bit more on each of these pieces and why we're doing it. So the first big thing is getting your LLC set up. Before anything else, before you even open up that separate banking account, we want you to get an LLC set up. So even if you're making, once again, $500 a month, $1,000 a month, it makes sense to get that LLC set up right now. It's really easy. Typically, states charge anywhere from $200 to $300 to get the LLC set up. You can use a website like Zen Business to help you get it set up for free. But here's why we want you to get an LLC set up. And the biggest reason is protecting your personal assets. So let's just say you have no LLC and you're putting good content out there and one of your followers sues you. It's very unlikely, but it does happen. Someone sues you and they win in that lawsuit. Well, if they win, in order to satisfy that judgment, basically they can go after any of your personal assets. So they can go after your home, your banking accounts, your investment accounts. They can go after your dog, your cats. Like they can go after anything and everything in order to get that satisfied. So the first big thing is to do that because as an LLC, if you're set up as an LLC, basically, if they were ever to sue you, the most they can go after are the assets of the actual business itself. And so, as a content creator, the assets that you have as a business are going to be very minimal. And so, you might have a checking account with the business or something like that. But besides that, the assets of the business are going to be pretty minimal. So that's going to be the first big thing of why we want to get the LLC set up is protecting your personal assets. The next big thing is legitimacy in the eyes of the IRS. So one of the big risks that creators have is that the IRS classifies you as a hobby. Now, why that is so bad is if they classify you as a hobby instead of a real business, is if you're a hobby, you get zero deductions on your tax return. So let's say you made $50,000 this year from your content creation and you had $25,000 of expenses. Uh, Basically, the IRS as a hobby, they're like, nope, you don't get any of those business expenses. You pay taxes on the full 50,000. So that can cost you thousands of dollars in taxes. Now, why the IRS might say that you're a hobby and not a real business is they might say, hey, you don't have an LLC set up like a real business. You don't have a separate bank account. You're not tracking your financials. You aren't paying quarterly taxes. So if you look and feel like a hobby, they're going to treat you like a hobby for tax purposes. But if you look and feel like a business, you're going to be treated like a business. So that's the second really big thing why you want an LLC. And the final thing is just for your protection of your social security number. When you have an EIN, a tax ID number for your business, when you fill out those pesky W-2s, for 1099 purposes, when you're working with brands and platforms, instead of putting your name and social security number, instead you can put your LLC name and the EIN of the business. What that means is, as you're giving W-2s out to all of these different brands and everything else, sorry, W-9s, I kept saying W-2s, W-9s out to all of these brands and everywhere else, essentially, you're not giving out your social security number to all these different people. So a great way to protect yourself. So once again, your job is to go get an LLC as soon as you can. It makes sense to just do it as soon as you can. The next big thing is set up a separate bank account. One of the biggest pains, and maybe some of you have experienced this, is it's the end of the year. You go to your tax accountant and they say, great, we need you to tell us all the income and expenses from your business. And you're like, oh, shoot, that's all tied in with my personal stuff. So you go through thousands of transactions on your personal bank account, your personal credit card, trying to like decipher what was business, what wasn't. Oh, was this Amazon purchase? I can't remember. Takes you hours and hours and hours. You're going to miss deductions. It's a massive pain. Uh, what you need to do is open up a separate account for the business, a separate checking account, ideally a separate credit card as well. where all of your income from the business, all of the expenses from the business are going in and out of that separate bank account, that separate credit card. It makes tracking your finances so much easier. It makes end of the year taxes so much easier. It makes sure that you don't miss deductions. Our favorite banks are Chase, Wells Fargo, Capital One. They are fantastic banks. Most of our creators have like one of these three. A few of them have online only banks as well, but really a bank like Chase, a lot of security. They work really well with creators. We have a lot of success with our clients at Chase. So get that separate banking account. And if nothing else, if all you have done is you just have that LLC, you just have that separate bank account, you are miles ahead of everyone else if you can do that. Take it one step further is to definitely track your income and expenses throughout the year. We recommend once a month just sitting down, looking at your income expenses, tracking them. There's really no need if you aren't making significant money. If you're not making above $7,500,000 a year, you can definitely use something like this. If you scan the QR code, it's a free income expense tracker that we created. Feel free to download that. And once a month, just sit down for like an hour, go through that separate bank account that you set up, put in the income expenses you had, categorize them. That'll make end of the year taxes so much easier for you. So those are the first big things we want everyone to take care of, whether you're a smaller creator or really well-established creator. Those are the first things you need to do to really lay the foundation for your business. Okay, so you have all of that tracked, you have all of that taken care of. Now, the next big thing we need to figure out are taxes. And this is probably what scares people the most. And we want to make sure that you're fully prepared for the taxes. So the first big thing is, what do you need to report on your taxes? We get this question a lot from our creators. We hear, in fact, we even see this on we see this on TikTok, on Instagram, and I don't know where this comes from, but we've heard this time and time again of people saying, hey, I've only made $5,000 a year, so do I still need to report that income? Or you might have an influencer be like, hey, by the way, I made a total of 12,000. That means I don't need to report to the IRS. No, that is completely false. No matter how much money you make, you need to report that in income on your taxes. Even if you made $1, you still need to report that on your taxes. So that's the first big thing to remember with taxes. So now let's actually go into taxes. I'm not going to go through all of these different forms that you might be getting at the end of the year, but I do want to focus on 1099s real quick because I know a lot of you are going to start getting 1099s come January. It can cause a lot of confusion and angst. So, big picture is if you work with a brand or a platform and you make more than $600 on that platform or with that brand or with that company, they are supposed to, big word is supposed to, send you a 1099 at the end of the year telling you exactly how much they paid you during the year. They also send that same tax form to the IRS. Now, not all companies provide 1099s like they're supposed to. So if at the end of the year, come January, February, you don't get W-2 or a 1099 from a company, don't fret. You can try to harass them, but a lot of times they'll just be like, sorry, we're not going to do that. You might be banging your head against the wall. Regardless of how many 1099s you do or don't get, like we talked about just a second ago, no matter what, you have to report every single dollar of income on your tax return, whether you got a 1099 or not. Now, when you do get these 1099s, it is really important that you check that against your records. This goes back to why it's so important to track all of your income. You want to make sure that what they put and reported actually matches your records. We've had many instances of our creator clients, they get a 1099 and a company says, we paid you $6,000. And we look at our records, we're like, it should have been $3,000. And the company's like, oh, whoops, our bad, let us fix it. Why that's so important is because if it's wrong, that means they're reporting a different number to the IRS. The IRS kind of cross-checks the numbers, and if it's off, then you might get a letter from the IRS being like, hey, what's going on here? So just make sure you double check that. Okay, I'm going to skip through a couple of these slides and I'm going to get to the juicy stuff of what taxes you owe as a content creator. So let's just say, kind of for simple purposes, you make $100,000 this year from your content creation. You have $40,000 of legitimate business expenses or deductions. You would owe taxes on the 60,000, not the 100,000. So this is why we're trying to find all the deductions, which we'll get to in just a minute, because that's going to help lower your taxable income more than pretty much anything else. So on that $60,000 of income, one of the biggest taxes is federal income taxes. Now, most people are pretty well, aware of this and are planning for this. But the federal income taxes can be anywhere from 10 to 35%, depending on your tax bracket. And it's definitely going to be a big chunk of the taxes that you owe. Pretty much no way to avoid federal income taxes unless you lie. But definitely finding legitimate expenses are the best way to lower the federal income taxes. The next big chunk is going to be state income taxes. So depending on the state you live in, if you live in like Texas or Florida, you pay no state income taxes. Or you can pay, up to 12% if you're in a place like California or New York. So kind of depending on the state, you pay anywhere from like 0 to 8, 12%. It's definitely less than the federal income taxes, but still a good chunk of change. The final piece, and this is the one that most people are not ready for, and this blindsides so many of our clients who have never done their taxes before. They just started making more significant income. This usually blindsides them more than anything else, and that's self-employment taxes. Self-employment taxes are 15.3% of what you earn, that net income down here. It's a massive hit that most people are not prepared for. Now, and let me just explain a little bit about what those exactly are. Self-employment taxes, if you've ever worked a W-2 job, you probably saw on your paycheck that they withheld federal taxes, state taxes, Social Security, and Medicare. You probably saw it, didn't think too much about it. But how they came to that number for Social Security and Medicare, it's 7.65%. So they take that 7.65%, deduct it from your tax or your income, and then submit that to the IRS. What most people don't realize is that your employer is also paying 7.65% to the IRS for Social Security and Medicare on your behalf. So when you combine the two of those together, you get 15.3%. Well, when you are self-employed, when you're working on your own and you're making this content, you're making this income, you are both the employee and the employer. So you pay both halves, and that totals 15.3%. Once again, it's a biggest one that people are not ready for. And sometimes this number here can be even bigger than the federal income taxes you pay. So what we usually tell people, in order to cover all of these taxes, if you set aside about 30% of everything you make, the top line income, not the net, but the top, if you set aside about 30% of everything you make, and you pay that in estimated taxes to the IRS and to your state, you should be in really good shape come tax time. You shouldn't really owe much. That 30% really applies to no matter where you are on the tax bracket. If you're lower in the tax bracket, it might be a little bit less, higher might be a little bit more, but 30%, 25, 30% is a really good rule of thumb. So speaking of quarterly tax payments, this is another big question we get from people is, should I or do I need to make quarterly estimated tax payments? And the answer is you should. And let me explain why. Once again, when you're working that W-2 job, every single paycheck, you had federal taxes, state taxes, self-employment taxes taken out of every single paycheck, automatically submitted to the IRS on your behalf. Now, when you are working on your own, there is no one withholding those taxes from you, from your earnings. And so it is completely up to you to send those payments to the IRS. Now, you can just wait till the end of the year When you do your tax return, you get your tax bill and you say, great, I will pay my taxes then at the very end of the year. Here's the problem with that. The IRS says, that's chill. You can definitely do that. But because you didn't pay those taxes throughout the year, like we asked you to, we are going to charge you 8% interest on those taxes due and hit you with other penalties and fees on top of that. So we've had clients who had to pay thousands of dollars in interest and penalties and so on because they didn't make those payments. Now, you might be like, oh, I've never paid quarterly taxes. I've never had to pay that interest and penalties and so on. You probably did. You just didn't notice it. It's really sneakily added on the tax return. It's automatically put in there. If you look at your tax return, past tax return, you'll probably see that you actually did pay it. And the more money you make, the more that penalties and interest are. And they just updated this 8% interest at the end of last year. So it's a huge, huge amount. We really recommend you make those quarterly payments to avoid that penalty. And how you can figure out how much you owe. Once again, you can take that 30% we talked about just a minute ago, and every single quarter, you kind of pay into that 30% of what you've made for that quarter to the IRS. That will cover you. If you want a more accurate, work with an accounting professional like ourselves or a CPA, someone else, and they can definitely help you understand how much you should pay in quarterly payments. So not required, but we strongly recommend doing it. And even if you're making a lower amount, if you're making like $10,000, $12,000 a year, it's still not a full-time thing. It's still really good to get in the habit of paying those. Even though the penalties and interest will be pretty minimal, it's still a good way to get in the habit of doing that early on. So that's kind of everything, the highlights of the taxes. And if you have any questions about those taxes, how they work, please feel free to hit us up. We're going to be more than happy to do a free consultation with you talk about any of those things. Okay, so let's get into the third part of the webinar and the part that maybe a lot of you are excited about, deductions. Like I said, deductions are the best way to lower your taxes. So the more deductions we can find on things that you're spending money on, the lower your taxes are going to be. Now, we have this cheat sheet. So if you want to scan this QR code, we put together this cheat sheet that just goes over all the different deductions that we're going to be talking about today. If you have any questions on these, once again, feel free to hit us up. We're happy to answer any questions you might have. But we're going to go through these deductions together. But before we do, one thing I want to clarify is just what is a deduction. You'll hear me use a couple different words: deduction, write-off, business expense. They're all the same thing. Basically, it is a legitimate expense that is, can be deducted from the income that you're earning. So if you earn $100 and you find $30 of legitimate business expenses, that lowers your taxable income. So the big thing is we're trying to find as many deductions as we possibly can. Now, a big question that we get, and this is probably one of the biggest questions in your mind, is can I deduct X from my taxes? Is Y a legitimate business expense? Now, the thing is, creators come in all different shapes and sizes, right? Like you might have a gaming creator, a food creator, a lifestyle creator, travel creator. You have creators across all these different niches. And so it's hard to say like, this is deductible for everyone. There are a few things, but a lot of things are going to be very specific to you. So let us give you a North Star to go by to understand what is deductible for you. And keep this in mind as you're thinking about like, should I deduct this? Yes or no? Use this as your North Star. So think about an iPhone. Apple, in order to develop the iPhone, they had to pay millions, hundreds of millions of dollars developing the iPhone. They had to spend money on research, on materials, shipping, packaging, all of these different expenses to make the iPhone. That's called their cost of goods sold. So they had spent all this money to make the iPhone. They then mark up the price. They sell it to you for a huge markup, and then that's how they make all their money. So that is how businesses work. They have a cost to develop their product that they are selling. Well, you as a creator also have a product that you are selling. Your product is your brand, the trust, your audience, your engagement. That is what you are selling, whether you're getting AdSense, whether you are getting brand partnerships, affiliate links, whatever it is, that is what you are selling. And there is a cost to develop that brand. There is a cost to develop those followers and that trust with your audience. And so any money you spend to build your brand, to build your audience, to build your content, those expenses are going to be deductible to you. So use that as your North Star. Now, don't get crazy and be like, everything in my life is part of building my content. And so everything is deductible. Don't do that. Make sure you're being smart about what you're doing. Okay, so let's talk about some things that are deductible for everyone. So this is universal, all creators can take, and then we get into some more nuanced things. So a few deductions that we can take. Definitely if you have any technology subscription like Planoly, Snipfeed, Adobe Suite, if you have Dropbox, but whatever it is, any of your technology subscriptions that are supporting your content creation, all of those can be deducted. Even things like your Netflix or HBO account, those can be deducted as well. You're using that for research and development costs to understand the latest trends and so on. So any technology subscriptions that are supporting even partially your content creation business, those are going to be deductible. Same with cell phone. Without your cell phone and home internet, you would not be able to conduct your business. And so definitely you want to make sure that you are deducting your cell phone bill and your home internet as well. The other big one is equipment. So if you buy a computer, a new camera, sound equipment, video equipment, lighting, any of those things, those are all going to be 100% deductible. If you bought a new cell phone, that's 100% deductible. And same with like your home office. Your desk, your chair, any of the decorations, if you have like a backdrop to your videos, all of that is going to be deductible as well. Health insurance, this is a really big one. If you are a full-time creator and you buy your own private health insurance, you can actually deduct the cost of the health insurance on your taxes. So that is a huge deduction for you that you definitely should take advantage of. That does not mean, if you have if you work a normal W-2 job and you get health insurance through your company and you pay health insurance through there, you can't deduct that. This is just if you have your own private health insurance outside of a normal job. Some other big ones, if you work with a marketing agency or if you run ads, obviously those are going to be deductible expenses. Professional services, cost to form your LLC, if you hire a lawyer to help you with contracts or anything like that, accounting fees, if you hire any virtual assistants or anyone to help you edit, shoot any of that content or create thumbnails for you, things like that, all of those are going to be deductible. You can also deduct a portion of your home. So if you have a home office at your house, you can deduct a portion of your rent or your mortgage on your taxes. So let's say you have pay $1,000 in rent, which if you are, like, I'm super jealous of that. But if you pay $1,000 in rent and 15% of your home is your home office, that means you can deduct $150 a month from your taxes as part of your business expenses. The other thing I'll talk about is personal items. So if you're camera facing, which most people are, hair, makeup, nails, those things are going to be definitely deductible. And clothing is a little bit trickier. If you're a fashion creator and you make all your money through like affiliate links, things like that, that's easy. All of your clothing is deductible that is featured as part of your content. If you're not a fashion creator, like a pure fashion creator, you can definitely deduct the cost of clothing that is part of your content. So if you bought a certain outfit or whatever it might be to produce a piece of content, that piece of that can be deductible. But you can't just if you're creating, let's just say gaming content, You can't be like, oh, I'm just going to deduct all my clothing. Like that's not going to fly. So those are kind of like the big general deductions everyone can take. Once again, there are going to be a ton of little deductions that apply just to you. So I really want you to like put on that North Star um, or view that North Star of like what is applicable to me that goes above and beyond like these basics that everyone can take. And that's really where you save a ton of money in taxes. There are a few other potential deductions you can be taking. Travel expenses, that's going to be a big one. If you ever like travel for collabs or part of a conference or for a brand partnership, obviously all of that travel can be deducted. But even if you go on vacation, we get this question a lot from our creators, like, hey, I am going to go on a Disney trip with my family. Can I deduct the cost of that Disney trip? The answer is potentially yes. You could potentially write off the entire trip. The big thing with that, though, is you want to make sure you produce significant content around that travel. I'm not just saying like you pick up your phone and like, hey, like here's a quick little reel. I throw up the reel, put that up. Perfect. I'm going to deduct the whole Disney trip. When I talk about significant content, I mean I'm using Disney because dad of four, so kids are my life right now. But let's say you're going to Disneyland with your family. Maybe before you're putting out a bunch of content like, here's how I pack for a family of four kids. Before here are the top 5 Amazon products, link in bio, and you have affiliate links to those things. And here's how we're like preparing the snacks for the airplane ride, whatever it might be. During the actual Disney trip, you're putting out tons of content. It's getting views, engagement, it's building your audience. Those are all really good, pieces of content that you want to put out. Where if you're ever audited, you can look back to that and say, look at all this engagement. Look how my audience grew. Look how it built my brand doing this content. So that's what we really want to do. Meals, definitely take advantage of meals. If you are ordering Uber Eats or DoorDash so you can work more, put out more content, definitely you want to make sure you take advantage of that. Even if you go out to dinner or lunch and you're with a friend or your significant other or your kids, you're talking about content, things like that. It's a business expense. Write it off. The other big one I want to talk about, because we get this question a lot, is can I write off a portion of my vehicle? The answer is yes. But you want to be very careful with this. Uh, Definitely auto is one of like the big high audit risk areas on your tax return. So use it intelligently. Don't be like 100% of my car is for business, not any of it's used for personal, and you write it off. Like it's a high audit risk area, so you just want to be careful with it. But if you use more than 50% of your car for business, you can actually write off a portion of your vehicle, or you can just like track the mileage and write off a portion of the mileage. So you can definitely write off a piece of your car, but definitely be careful. Don't get too crazy because it is a high audit risk area. So those are the major deductions that we wanted to go through. Hopefully that was helpful and that you were able to find a few that you weren't doing. One question we get a lot from people is, so should I just like go spend more money so I can have more deductions? And the answer to that is if you're spending money to as an investment to grow your brand, that's a good use of your money. Now, if you're like, oh, cool, like I'm just gonna go spend a bunch of money so I pay less in taxes, that's not smart. If you think about like $1,000, let's say you had $1,000, you're like, okay, either I can go spend $1,000 on just random crap to write off, that way I pay $0 in taxes, but then you're left with $0 in your bank account, or that $1,000 I pay 30% in taxes, and then I'm left with $700. Well, clearly that's the more intelligent thing to do. Um, so I'm not saying just like go out there and like spend a bunch of money on a bunch of things just so you don't pay taxes. What I'm saying is you're already spending money on a bunch of things in your life to build your content. Let's take those and make sure we deduct them from your taxes. Um, I'll just quickly hit on a couple of FAQs. We get this question a lot from people is, does my company pay taxes as an LLC or as an S Corp? And the answer is no. your company does not pay taxes. All of the income and expenses that go on from your business, whether you're an LLC or no LLC, all of those income expenses flow from the company and directly onto your personal tax return. And then you personally pay taxes on that. Next thing, like I talked about earlier, is I made less than $5,000, 10,000, whatever the number is. Do I still need to report that income? Do I still need to pay taxes on it? The answer is 100% yes. You need to pay taxes on it. You need to report it no matter what. And finally, and we don't have time to go through the S corp piece of it, but should I be an LLC or an S corp? You may have heard that term S corp thrown around. Now, at a high level, an S corp can save you thousands, tens of thousands of dollars on taxes by helping you avoid paying some of those self-employment taxes we talked about earlier. But it only makes sense to become an S corp if you're making enough money. If you're making more than $100,000 a year from your content creation, it almost 100% makes sense to become an S corp, and you can easily save $10,000+ on your taxes by being an S corp. If you are earning less than that, if you're earning $50,000, $60,000 a year, it honestly probably does not make sense for you to become an S corp. There's just a lot of different administrative things you need to do. You definitely need to hire an accountant to help you with that. And probably doesn't make sense to become an S corp at that point. But definitely $100,000 or more, definitely become an S corp. Talk with your accountant, talk with us to get that set up. Like I said, we don't have time to go through an S corp, but if you have any questions on an S corp, like should I become an S corp, whatever, definitely feel free to reach out to us. You can definitely go to our website, cookiefinance.co. You can set up a free consultation. We'd be more than happy to talk about S corp or really anything we talked about on this webinar. But we have a couple questions. I want to make sure that we answer these questions before time runs out. One of the questions is, with estimated taxes, do I still need to pay these estimated taxes? Will I still have that penalty, that 8% penalty, if I had negative income for my business this year? The answer is no. You're not going to get charged penalties and interest because basically, if this net income from your business is negative this year, that means you don't owe any taxes on your business. And so you wouldn't owe any estimated payments. So you're not going to get hit with any penalties or interest on that. So hopefully that answers that question. But yeah, if you have negative net income from the business, you don't owe any taxes, you don't need to make any estimated payments. Therefore, you're going to avoid any penalties or interest that you have to pay. Okay, another good question is gifts. So, this person gets money from their gifts, or sorry, they get gifts from different brands, and do you have to pay taxes on gifts? This is a very common question we get, especially at the end of the year. And there's kind of two different categories of gifts. The first one is a company or brand just sends you a PR box or just sends you some stuff and they say, hey, here are these cosmetics, here are these cookies, here whatever. We really hope you enjoy them. Wink, wink. And clearly what they're doing is they're sending it to you. They're hoping that you open it, you use the product, you're like, oh, this is fantastic. You then go on your socials, you're like, oh my gosh, I just got these amazing cookies from Cookie Finance. Cookie Finance is the most amazing place in the whole world, whatever. You do not have to report any of that on your taxes. You don't pay taxes on that. You don't report it, any of it. That is just a free gift, free and clear. Now, there's a separate kind of gift. The other gift is, you work with a brand, let's say a hotel, and a hotel says, hey, we would love to gift you 3 nights at our hotel. But in exchange for that, we need you to produce X, Y, and Z content in exchange for those 3 nights at the hotel. Now, that is considered income by the IRS. It's called barter income. And basically, what the IRS says is you need to report the fair value of that gift, if you want to call it that, as income on your taxes. So you might look up and say, well, what would 3 nights at that hotel cost? And you say, okay, it's $750 to stay for 3 nights at the hotel. You report that $350 on your taxes as income, even though you did not receive, the actual income. Now, if it's less than like $50, if you just get a bunch of random things from different companies, you don't need to report that if it's like less than $50. So don't worry about that. If you just get like a ton of like one-off cosmetics, we have a bunch of creators on TikTok who just get like a bunch of like one-off, cosmetics, things like that, like for their TikTok shop, things like that. You don't need to report that if it's less than $50. Don't worry about it. But here's one thing I will say about all of that. Before you get too worried about the tax implications and how you figure out the fair value of all these things. It is extremely rare, unless it is like a mega company like American Airlines. Um, Most companies, 99% of companies, will never report that to the IRS. So if they gift you a stay and you do some work for them, 99% of companies will never report that to the IRS. Uh, Basically, there's no exchange of money. If the IRS were to audit you, it's almost impossible for them to see that. They would see no transactions coming in and out of the bank account, your personal business, whatever. So it's basically, no way to track it. The companies aren't reporting it. No one is reporting it. So do with that information as you will. But basically, it's almost nearly impossible to audit it, and most companies are not reporting it. But do with that information as you will. Okay, I think we have time for one more question. The final question is, I have multiple businesses. It seems like this creator is putting some of they have like a business that they create content for other YouTubers, like an editor, and they also have their own YouTube channel, making money from like two different sources. Do they need two different LLCs? The answer is probably not. What we tell people is, if you have an editing business, you have a consulting business, you have your content creation business, it's all more or less the same. The risk is the same. Instead of creating three separate LLCs, lump it all together under one. It makes it way easier to track your finances, to do your taxes, to get that separate bank account. If you do want three separate LLCs, which I don't recommend, you would need to get like three separate bank accounts, report that three different times on your taxes. Like it really becomes a huge headache for pretty much no benefit. Now, if one business is like a rental property and the other is your content creation business, 100% those need to be in separate LLCs. A rental property, completely different risk profile, much higher chance of getting sued for slip and falls, all these things compared to your content creation. Those separate LLCs. But once again, if there's a bunch of different businesses that you do, different revenue streams, are all more or less kind of around the same theme, put it all under one LLC. I think that'd be great. So um, I would just really appreciate once again the time that we had to be here. Once again, if you have any questions, feel free to go to our website, cookiefinance.co. You can book a free consultation if there's anything else on here that like you had questions on. You can also go to our website. We have tons of free resources, really good blog posts that go in depth on all of these things if you don't want to talk with us. But really appreciate everyone's time, and really thank you to Emma and her team for allowing us to come on here, and thanks for having us.